Hello everyone, thank you for joining us this morning and welcome to this PTS Primo Charts presentation of Steps. Steps is a great new product that we have that fine-tunes your entries. Entries are a fairly big problem for a lot of traders. A lot of traders will email me or contact me and say, Steve, I kind of like the strategy I'm currently trading with. I have no problem with it. My entries are just not that finely tuned. I enter too early, too late. I don't know when to get in. So there's a lot of different things going on with your entries. So this is one piece of the puzzle that we can accommodate, we can help you with. For example, if we take a look at this chart right here, this is a 10-minute chart in the spiders. Now, obviously, there's a nice trend going along here in the last couple of days. How could we have taken advantage of this very strong trend? Well, with our new PTS Primo charting platform, as you see here, all you would have to do is click on steps number 1 and look at all the buy entry points that you could have taken advantage of. Now, as well, we can also apply this to a weekly chart. Okay, here's a weekly chart of Facebook going back to 2014. All you would have to do would be to click on the steps format and look at the buy setups that were signaled along the way on a weekly chart. So this is what we want to help you with today. This promises to be a great presentation. We're going to be talking about applying steps with examples that have mainly been taken from our PTS Primo charting platform that we're very excited with. So welcome once again. Thanks for taking time out of your Saturday morning. My name is Stephen Primo. I'm the president and founder of Specialist Trading. And around 8 years ago, I teamed up with Pro Trader Strategies, and we've put together all these educational videos and strategies and workshops for you. And now we've put together steps on top of our newly developed charting platform, educational charting platform, with this PTS Primo Charts. So we're really excited about sharing this with you on this Saturday morning. I'm going to show you a lot of examples because remember, steps is great for entering a trade. This is where it really helps you, and I'll show exactly how to apply it in this presentation. I'll show you exactly what you need to do to help your entries get that extra added consistency that you've been looking for. So I'm going to show you a lot of examples, different markets and different time frames, but before we begin, as always, please take a moment to view our disclaimer. I'm going to show you a lot of different ways in which to apply steps, but please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. So please take a moment to view it, and then we shall begin this educational presentation. Okay, and I'd also like to take this moment to invite each and every one of you to follow us on Twitter. You may want to copy down our handle there. It's an abbreviation for Specialist Trading, at SPCLSTTRADG. Every day I post new information, anywhere from signals that our strategies have generated to little bits of wisdom along the way. So things to help you with your trading on a daily basis. So feel free, and I invite you all to follow us on Twitter. Okay, so as I stated in the opening statements, we are an educational company, and this is going to be an educational presentation. It's our goal at Pro Trader Strategies and with Specialist Trading, and most especially on our new platform, to teach you. That's what we're all about. We want to make trading simplified for you by giving you all the different methods, all the different strategies, techniques that have stood the test of time. I think one of the reasons why most traders fail is because they haven't received the proper education. So they're just relying on someone to tell them what to do. But once you have the proper education and you know how to apply it, well, then it makes everything so much more simpler for you. So if you've been given techniques that are really a high level of consistency that can really help you along the way, well, then you're half the battle is done. Now, today, once again, we're going to be talking about an entry point. And when I first started trading, I had a very difficult time with entries, and I know many of you probably do. I know that a lot of time is focused on entries, but still people have a very difficult time in how to apply it. So I'm going to share with you a great new technique in which to help with your entries tremendously. But before we begin, let me ask you this question, and I'm sure it's happened to you before, but I'll just generically ask, has this ever happened to you? Let's say you're ready to trade, and then you enter into a trade, but you get in too early. Okay, so you enter into the trade, and the minute you buy it, it goes straight down. Or the minute you sell it, it goes straight up. That's happened to everyone before. It's very discouraging because you think, boy, it's almost as if the market was waiting for you to enter so that it could do the exact opposite. And so what happens many times is you get this feeling of fear, or that you're on the wrong side immediately, that the trade was really terrible and that you should never have gotten into it. So you stop yourself out. You just exit the trade maybe at the market, or you got stopped out and you say, that's it. And so you get out, and then lo and behold, later on, maybe a few bars later, it goes exactly in the direction you wanted it to go, right? Really discouraging, happens to a lot of traders. And so you're entering is based off correct information. You just entered a little bit too early. Or how about this? You enter a trade too late, okay? Maybe your strategy, your system, or maybe you're just a little bit too fearful to get in because you figure there's too much noise and chaos going on, so you wait a little bit for prices to pull back, but it just keeps going and going, so you jump in and buy. You don't want to miss it, and the minute you buy, that's when it's over, right? So your strategy, your method got you in too late, or else your emotions got you in too late, and by that time, most of the profit was already taken, was already eaten up. Or how about this? Has this ever happened to you? You don't know when to get back in. Let's say you enter into a trade properly. You have a nice little profit. You get out and you say, boy, that's great. I made a nice little money on the day. And then guess what? It just keeps going and going, and you want to get back in. But your strategy or your method, whatever it's based on, hasn't generated some type of entry point for you to re-enter. So you don't know where to enter again, and you don't want to miss any more. And you feel like you're giving away the farm here because you just basically left all this money on the table here, okay? And then lastly, has this ever happened to you? You don't have the confidence to pull the trigger. Now, this is probably one of the main things with a lot of traders. Many traders feel out of their element. They either buy this system that costs thousands of dollars, or they enter into a market trading that is totally out of their realm. It's too fast, or they just don't understand it. And even though they may have a strategy or method that actually works over time, that has some level of consistency, they just don't have the confidence because they haven't seen the results. And they're very frightened. So they want to have an entry point that makes them a little more comfortable, that makes them feel like, well, you know, I don't have all this major risk when I get in. At least I know that I'm buying fairly close to the bottom or selling fairly close to the top. Now, these are all major concerns for any type of trader. These are all entry concerns. Remember, today's topic is going to be specifically focused on entries. We're not going to be talking about stop placements or exit. We're just talking about the problem of entries. And these are the four main issues that most traders have with entry points. Well, in order to answer or help these type of problems, you first have to come to the realization that there really are only two types of entries. So, you know, part of the problem is that we overcomplicate things. We think, well, this is much more different than anything else I've ever traded. This is, you know, much more complex, or this strategy has a different way of trading. Really, if you simplify it and you really go down to the common denominator, there are only two types of entries. So this will help you in alleviating these problems once we go down and define what these two types are. All right. The first type is a continuation entry, all right? So if you're not familiar with a continuation entry, it's basically whatever you're trading, whatever market, it does not matter if it is a tick chart, it does not matter if it's a monthly chart, if you're an investor, it does not matter if you're a day trader or just simply looking at weekly bars. Whenever you get some type of trend, as we see here on this generic chart, continuation entries simply buy along with the trend, okay? So they're just saying, listen, the trend is in place. We're just going to take these high probability entry points and buy along. We're not going to wait for any type of sell-off. We're not going to wait to get into lower prices because we don't want to miss this. In other words, the horse has taken off and we want to jump on, you know, or the train has left the station. We're not going to wait for it to stop for us. We're going to just jump on while it's taken off before it goes even more. You see this with what's called a lot of fast markets or a lot of strong trending markets. When you have a method or a system that trades this type of a market, this is called continuation entry. Now, the second type of entry is a pullback entry. This is a little bit more refined or conservative approach because we're not looking to buy in a strong trend that we don't want to miss. We don't want to jump on a train that's just taking off, all right? What we're doing is waiting for some type of sell-off in an overall uptrend or a rally in an overall downtrend. For example, when we see the market take off in this generic stick chart, say we're going up, we have a nice uptrend. What happens with most markets, well, they will stop or have a reversion to mean. This is called a pullback when prices sell off. Now, what the common mistake is with a lot of traders is they think that, well, the trend has ended and now we're reversing, and now the trend is going lower. But in all actuality, if you have the right tools, the right methods, if you've studied and researched and have the proper education, you'll see that this is just simply a pullback, meaning that prices have pulled back to a reversion to a mean before they resume their standard upward movement. All right. So pullback entries are based off of this pullback, and according to the parameters, you want to be purchasing somewhere around the bottom of this pullback if you're going long, or selling around the top of the pullback if you're going short, because most likely the trend is going to resume on its upward course. All right. So it has this kind of a stair-step approach. It goes up, it kind of stops and pauses, goes down a little bit. That's where you want to enter on that pullback before it goes back up. So the main issue here is, the main problem is, you have to decide what type of trader you are. Are you a continuation type of trader? Do you, just say, I don't care, I'm just jumping in. The river is going down strong and I'm going to jump in and go with the rapids. Or are you saying, I'm going to wait for things to slow down before I get in. I'm going to wait to get in at better prices. I'm going to, wait for a pause, this pullback, and then get in prior to another snap in the rally. All right, because this is what will make you comfortable. Most traders fail because they don't feel comfortable with the method or technique they're trading. And a lot of it is based on the type of entry. So think about it, do a little, self-discovery here. Ask yourself, what would make you feel the most comfortable? And this will, solve half the problem you have. You may be a pullback trader, but your system or method is based off continuation trades, and that's why you feel uncomfortable. You're not, implementing it correctly. Or you may be a pullback trader, or I should say a continuation trader that likes a trade with all the action and all the strong movement, but your strategy is based off pullbacks, and it's too slow for you. You want to get in, and you can't stand waiting for prices to sell off. So that's half the battle right there. Well, here's the good news. Steps will answer both of these questions for you. Once you decide what side of the fence you're on, what type of trader you are, Steps automatically helps you. Regardless if you already have a method that you're trading with, or if you don't have a method at all and you want to build off of some type of entry, this is where Steps comes in. Let me explain exactly what it is. Steps basically just stands for short-term entry points. That's all it is, because it's a proprietary technique that just defines the short-term entry, either for continuation trades or for pullback trades. So the definition here is that Steps is not a strategy nor an indicator. So that's the main thing we want to get straight. It's not a strategy that comes with full-fledged rules for exiting, full-fledged rules for stop placement, full-fledged money management rules, and it's not an indicator. It's not telling you how high or how low something will go. It's not telling you the momentum or the breadth, but it's a combination of two proprietary entry techniques that can be applied to your current trading method or used as building blocks for the construction of one. So if you're the type of trader who likes to tinker under the hood, who likes to build your own type of strategy, and you've studied the market, you're a student of the market, and you just need a good entry technique, Steps is for you. If you're also the type of trader that says, Steve, I like my current method, I've traded it for years, I feel comfortable, it's just not producing the type of results I like, it could possibly be your entry points. Steps is for you. It will help both of these situations. All right, so let's go over and show you exactly how to apply each and one of these different entry techniques using our new PTS Primo charting platform. We'll show you how simple it is by just being one click away, and how you can find those really fine-tuned entry points. All right, step one. Step one is designed for entry points for trading strong trendy markets. So it's for continuation traders. So if you're a continuation trader, you want to focus on step number one. All right, let's look at strong trendy markets. Here, once again, here's an older chart of IBM. Obviously, there's a strong trendy market, not much pullback action going on here. We just pretty much took off. How could Steps 1 help us? Well, once you have the new PTS charting platform, all you have to do is click on step number 1, right? You automatically know you've done some inner research. You know that you're a continuation trader, so you're just interested in following the strong upward trend at this point. Click on step number 1. You'll automatically see a drop-down menu, and since it's a proprietary tool, we want to just simply click on the signal arrows, because this is going to tell us automatically where to enter in terms of the bars. And once you do that, look at all the buy entry points that were here along the way. You could have taken advantage of each and every one. Now, since this is just simply a proprietary entry technique that generates bars, it's up to you to decide how to actually enter. Remember, this is not a strategy, so we're not telling you, but we can give you some points, some suggestions here. Firstly, you can enter on the market close. So if let's just take this bar, for example. Say you were interested and you thought, boy, we're really going to take off here. Once the market was getting ready to close, you would have seen that there was already a green arrow being generated. You could have just purchased this stock IBM maybe 5 seconds before the close and said, I'm just going to go out long. Or you could have entered on the next bar's open. So let's say you're working, you don't have the capability to be in front of your chart all day long. So that night you punched up steps 1, you see that there was a buy signal on that particular day, so you just enter a market order to buy on the opening of the next day. Now here we have the opening of the next day. You would have actually gotten a better price because it opened lower. Or here's a more conservative approach. If you are able to be in front of your computer, you would enter 1 tick above the high. So as you see, here is the high of the bar. This is a more conservative way to get in because you just want to make sure that momentum has continued. So you would either place a stop order. If you're in front of your computer, just wait for it to trade 1 tick above, and that's when you enter. Now, see, using this technique, this conservative technique here, we have 2 buys right here. We never traded above these highs, so you never would have entered until right here. All right, you see how you would have maybe drawn an imaginary line and said, when we trade above, that's when I'm going to enter. And you would have waited a week or 2 before you entered, but you would have entered here and it would have taken off after that. Okay, so you see there are all these different approaches depending on what type of trader you are. Okay, you can enter on the market, you can enter on the next bar open, or you can enter 1 tick above the high of that signal bar. Now, right here, the trend changed, and someone would say, well, Steve, what happens when, things go the opposite direction? I'm going to be left holding the bag. Well, once again, if you use that more conservative approach here, you see that we never traded above these bars. So this is what we suggest to most traders in the beginning. Use the conservative approach where you're going to buy 1 or 2 ticks above, because here you see we never got long, and then look what happened. The trend automatically changed. Now, the beauty of this proprietary entry technique, step 1, is that it really finely tuned the trend. So it knows when the trend has changed, and when it does, it simply reverses. So once the trend changed, look at all of the sell signals that were generated. And you could use the same approach. You could go short on the close if you wanted to. You could buy puts if you don't short the stock. You could wait for 1 tick below that close, okay, on the next day. Or you could wait for the opening of the next day. The same actual entry rules for going long you can use for going short. Okay, here's GWW, a very strong trend to the downside. Now, a lot of traders like to trade short or trade options, buy puts. It makes absolutely no difference how you decide to enter into the markets, whether you're buying options or actually shorting or buying the stocks. It makes no difference because these signals are just generated telling you what the stock is most likely going to be doing. So once again, you would click on steps number 1 and look at all of these sell signals that were generated. And the same options for entering would be applied to this as well. You could enter on the market close. As you see here, looking at this bar, you would have entered on the close to go short or just simply bought puts if you wanted to. Now, you would have had to stick through a week or so of the market really not doing anything, going a little bit higher, but that's up to you. You could also have waited for the entry on the bar of the next opening. So in other words, we closed here, we opened the next day a little higher. That's where you could have shorted it or bought in puts. And then lastly, the most conservative, enter 1 tick below. So once you had this sell here, you draw an imaginary line and wait for it to cross below, and that's where you'd go short. Okay, so you would have missed all this 5 days of kind of going sideways to higher and entered right here, and the trend was going much lower. Let's look at a weekly chart of the spiders. Obviously, very strong trend. The market has been going up since 2012, but we're starting here in February 2016. Let's say you wanted to enter and just take advantage of the strong moving trend. Well, you hit steps 1 again. There's a buy there in July of 2016, a year ago. Another one in November last year. And then another one here in December of this past year of 2016. All getting you long in the market, all generating high proprietary buy entry points based off of continuation. You see here, we're not waiting for any type of sell-off. We're just getting in when it looks like it's going higher. And another one was generated here in January of this year. Now, a lot of people say, well, Steve, news comes out, there's no way any of this is going to work when the news comes out. Well, listen, we're not guaranteeing anything. We're just trying to give you high probability entry points. We're not guaranteeing you that we're always going to be on the right side of the news. But it's been my experience in my 4 decades of trading. I started out on the floor of the exchange, and when these principles were taught to me, I realized that many times, if you're in sync with the trend and you're using these tools that have a high level of consistency, you will be in sync with the news. You will be on the right side. Although it's not guaranteed, once again, it doesn't mean that it's always going to happen. Many times, the market will tell you in advance what it wants to do prior to a news event. And this is where steps comes in handy. For example, here in July, this past month or so ago, JP Morgan announced it beat the street second quarter forecast. So as we read this here, JP Morgan Chase & Company, JPM, on Friday reported second quarter earnings of $7.03 billion. The bank based in New York said it had earnings of $1.82 per share. The results exceeded Wall Street expectations. The average estimate of 7 analysts surveyed by Zacks Investment Research was for earnings of $1.57 per share. So it really exceeded the earnings. Great news, okay? Trouble is, when most traders hear this, they'll jump in, and this is the scenario where it's too late. You're a day late and $1 short. So could steps 1 have helped us? Well, as we look at JP Morgan, coming into June this past year, this couple of months ago, we were actually in a downtrend. And look at all the sell signals that were generated. Each one could have been profitable depending on how you entered. But once the proprietary tool disseminated that the trend had changed, well, look what happened. Here was a buy signal here, okay, and then another one here. These buy signals were both generated in June before that announcement. So do you see how the market actually was telling you in advance there's a nice rally, a nice trend moving to the upside? You can jump on board if you want, because we have a nice strong trend. And according to the proprietary rules of steps number 1, this is where you want to jump in, because you don't want to wait for a pullback. It may be too late. If you wait for that, you'll miss this really nice run up. And this happened well in advance of the news. Now, people say, well, Steve, I don't trade daily bars or weekly bars. I'm a day trader. I'm an intraday trader. Okay, well, here's once again that 10-minute chart of the spiders. Okay, look at this strong trend. Now, this is a really strong trend to the upside. Not much room for sell-off here. You would have had to been very quick if you like to sit in front of your computer all day. A lot easier for strong trend traders to simply click on steps 1 and look at all the buy signals generated. And you can have your pick of which one you'd like. There are some here that are better than others, obviously. But these are all high probability entry points. If you're a student of the market, if you like to study and research and apply this to your own trading method, this is a great way to enhance your results. Okay, so we see how steps number 1 helps you with traders who want to just jump in. You know, they see that the train is leaving the station. We don't know if the train's going to stop. Let's just jump on board because we want to take advantage of that. We're not going to wait for news. We're not going to wait for earnings. We're not going to wait for some type of pullback. We're jumping on, okay? That's the first style of trader who needs steps number 1. But what about the other style of trader? The one who's a little bit more conservative, who likes to wait, who doesn't mind waiting and having less setups, but having high probability setups that generate lower price levels, so you can buy it a little bit cheaper, so you're not chasing something, okay? A lot of traders feel uncomfortable, and personally, I don't really usually like to talk about personal experience, but personally, I am a step 2 trader. I like to purchase on pullbacks. I don't mind waiting. You know, when I was trading on the floor some 40 years ago of the stock exchange, I was primarily a step number 1 type trader. Many years younger, a younger trader, and you know, not so experienced, and I would jump in. I wouldn't care, just jump in. Now, as I'm older and been trading for 4 decades, I find myself as being more of a step 2 type of trader. I do not mind waiting for those pullbacks. I do not mind having less trades. It's okay. I would much rather know that I've entered into a trade at a cheaper or a less expensive price, either long or short, than just simply jumping in, okay? So this is who steps 2 is for. Steps 2 was an entry point designed for trading strong pullback markets. So it's a proprietary technique that figures out what the overall trend is. It doesn't jump on board that train that's left the station. It waits for the train to stop and reverse, wait for you to get on, and then the train takes off. So this is who steps 2 is for. Remember, it's extremely important that you decide what type of category you fall under. All right, so look at this chart in Tiffany right here. Someone looking at this would say, well, yeah, Steve, you're right. Look at the strong upward move that took off in Tiffany. But this thing has hit some major resistance. It's tremendously overbought. All the indicators are overbought. It's hit some major resistance the institutions are selling. I'm going to go short this. I'm going to buy some puts because it most likely is going to come down here to this base before it stops, okay? But this is the way most traders trade, and sometimes that will work. But the way Steps 2 works is that it's a proprietary tool to find out what the overall trend is. And if it's a strong trend, it meets all the requirements, it will actually tell you that this is not a change of trend. It's just simply a pullback. All you have to do is click on the Steps 2 tab in the Green Strategy tab of the PTS Primo charts, and a drop-down window will appear. Once again, since this is proprietary, you would just click on the arrows, and as you see here, this was not a change of trend. This was actually a buy signal. This is something you should be jumping on. Don't look as if the indicators are overbought. We don't care about that. We're looking for a high probability entry point, a reversion to the mean. So you could have jumped in right here when everyone else was selling, and the trend resumed about a week later. Okay, so this is how Steps 2 work. You're going to get less signals, but they're going to be higher probability. They're more refined and get you in at lower levels. You're not going to be chasing stocks. You're going to be sitting there waiting for a high probability setup. All right, let's look at GPC. Once again, someone looking at this would say, well, this looks like we've hit bottom here. The institutional forecasts I follow are all long and bullish around this. They're supporting this level right here. And it looks like we're going to go back up. The earnings are expected to be very good. So I want to buy this, okay? That's the way most traders make their decisions, okay? The beauty of Step 2 is that it doesn't rely on any of that stuff. It doesn't look at any support and resistance, doesn't look at any volume, doesn't look at a ton of indicators. It's a proprietary tool that discerns what the trend is, and then it just tells you when a high probability pullback area is. All you have to do is click on the Steps 2 tab and see that a sell signal is generated. We're not going back up. Most likely, we're going lower. This is just a pullback in an overall downtrend because the trend is still down. And look what happened to the stock. Okay? So this is who Steps 2 is for, the trader who's willing to wait for those high probability entry points. Now, a lot of traders can also use Steps 2 for new company investments and IPOs that have just come out. We look at Facebook. Remember Facebook, when it came out, it was the darling of all the IPOs. Everyone thought it was going to make them millionaires overnight because, such a strong stock and company, and it was just the talk. I remember people talking and asking me what I thought, and I just said, well, we have to wait and see. And this is what happened to most people. The stock, I believe, came public roughly around the $40 level, as you see here in 2012, and immediately lost about half of its value. Most of the investors who held on, most likely sold after they had lost half of their investment. A lot of traders just said, this is ridiculous. I don't even know what I did this for. But many times, it doesn't mean that the company is bad, as we know now that Facebook has taken off like crazy, well past the $40 level. It just means that your entry point was faulty. You shouldn't just jump in. It's like everyone trying to jump in at the same time, everyone in the pool at the same time. That's not the time to get in. Most step number 2 traders wait for everyone to get out of the pool before they jump in. So let's see how that could have helped us. Rather than just simply buying here on the initial public offering, these are weekly charts, by the way, we wait for a fine-tuned pullback entry. So as we see here, a year later, in March of 2013, this was now discerned that we're in an uptrend. This overall downtrend had concluded, and now we are in an uptrend based on its proprietary tools. And this sell-off is still in an uptrend. Now, it didn't really do much, but remember, we're investing. And this purchase here, roughly around 22, 23, is much better than buying here at 40. So it's okay to hold on here. And then if we wait, we see another buy signal generated here around 22 or so. So you could have purchased more or simply waited, and then we all know what's happened with Facebook. Okay, now these are weekly charts, and the stock finally kicked in about a couple of years later and took off. Now, there was another pullback here in 2014. Here's where people thought, well, that's it. This thing's over. It's topped out. Bad news. Time to sell. No, Step 2 still generated a buy signal on this weekly chart. And if we go forward, from 2014 to 2017, Steps 2 pinpointed every major pullback in Facebook on a weekly basis. So this is how it can help you. It can help you investing. It can help you if you like to get in companies and wait for the fine-tune entry as opposed to just simply chasing it once its initial public offering comes out. Now, let's look at Snap, okay? This is an hourly chart of Snapchat. We all know what's happened with that stock, okay? But if you like to day trade, you can still day trade IPOs. Some of you, and as you look here, you can also day trade new IPOs with steps number 2. There are some really nice pullbacks here. Here was a pullback, another one here, another one here. Obviously, some are better than others, but you can use this on an hourly chart or a weekly chart. It makes absolutely no difference, okay? Depending on how you decide to enter, even though this was a buy and it went lower, if you had purchased one or so ticks above, you would never have purchased until it traded above right here. So you see, depending on what your entry point is, you may have some really nice trades here. Now here's another way to use steps 2, and here's another way people enter to the markets, have broker recommendations, similar to IPOs. Let's say you have a broker that you work with who tells you his ideas or something that's the new hot stocks, or else you have a broker that issues recommendations for stocks. They give you online recommendations. And so many times a brokerage house will recommend a certain stock that they like. All their analysts, all their guys have been working over years and study the markets and everything, love this stock, okay? So you say, well, they can't be wrong, right? They all went to school. They all know what they're talking about. They're economists. They're analysts. They've been in the market for ages. So you buy just like everyone else. Everyone else is jumping into the pool at the same time. And then look what happens, okay? This is where most people are frustrated. They say, these brokers, they do nothing but lose me money. I buy at the top, I sell at the bottom. And this is what steps are for. They're to put the power back in your hands. So rather than just simply go off what someone else is recommending, wait for the dust to settle. This is where a pullback trader comes into play. So if you're a pullback trader, you're going to wait for the dust to settle. And you'll simply click on steps number 2 tab. And once you do that, you'll see the buy signals being generated. And here was a buy signal. Rather than buy it up here where everyone else was jumping in the pool, you're going to wait till everyone gets out. And if it was good to buy at this level, it's much better to buy down here. And that's where the real entry point was, okay? So this is the beauty of waiting for a high probability entry as opposed to chasing it. Now, if we want to intraday trade, once again, here's a 15-minute chart. This is Apple. As you can see, a very strong trend. This could have worked well with a steps 1 type of trader, but if you're a step 2 trader, you can still intraday trade, and you'll get these nice high probability lower buy signals, okay? You can see there's a lot less signals, but they've got, finely tuned to buy at these bottoms here. Okay, so before we go into the question and answer portion, let's review exactly what we revealed with you today. Remember, steps can be applied to virtually any strategy. So it doesn't matter if you already have a strategy that you're using and you feel fairly comfortable with. We strongly feel you will increase your odds for success in terms of consistency if you simply add steps as your entry point, as opposed to using what you've been already applying as your entry point, okay? And let's say, you say, Steve, I like my entry points. Well, let's say you want to get in and buy more, or you get out of the trade and it continues to go higher and higher. You can still use steps for that to help you know when to get back into a trade. Now, steps can be applied to any market. I've showed you primarily stocks here, but it can be applied to ETFs. It can be applied to futures, to currency pairs, to E-mini futures, commodities. It makes no difference. So I don't want you to think that just because we mainly talked about stocks here, that you can't trade the Australian dollar using steps. We have a number of traders around the world in over 110 countries that apply steps with their trading. You can also apply steps to any time frame. So once again, I've shown you 15-minute charts, 5-minute charts, weekly charts. We have a lot of members and students who are actually investors, and they just simply like to look at long-term charts, weekly and monthly charts. That's fine. You can still use steps for that. You can use it for your long-term portfolio, for your IRA. If you'd like, many traders like to get back in and increase their positions. That's fine. Just apply steps 2 if you'd like to, and you can use that for the next pullback. We showed you that with Facebook, how you could have added to your long-term position by buying more shares on those pullbacks. And lastly, it can be applied to any directions. We have a lot of traders who don't even trade stocks, they actually trade options. So they like to buy puts, they like to buy calls, they like to use different option strategies to go long and short. They even like to write options. It makes no difference. That's fine. Steps doesn't tell you how you're supposed to be entering. It just gives you these high probability entry points. How you decide to enter is up to you. If you want to enter through an option, that's fine. If you want to enter through actually buying the stock or selling the stock, that's fine. If you want to enter through purchasing a contract, that's fine. It's just telling you where the high probability entry point is and then leaves the rest up to you. All right, so for taking time out of your Saturday morning here, we want to offer you a great attendee discount. This is just for the people that have attended today because this is a very special offer. We're going to be offering you steps. Remember, this is our proprietary techniques, the continuation entry, the pullback entry. You can apply to any strategy. You can build your own strategy. It's great for re-entering trades, and it comes along with our premier educational portal. This includes the new PTS Primo charts. I'm really excited about this. I spent over a year developing this with Pro Trader Strategies, my sister site, and we have everything I've accumulated in 40 years right there in front of you, just one click away. There's nothing that you have to upload. There's nothing that you have to specifically format for your proprietary type of trading. It's right there, as you've seen on the platform. Now, I want to share with you something that just happened yesterday, just to show you that we're not cherry picking trades. I know a lot of webinars you go to, they show you examples that are maybe years old. And I know I've showed you some older charts here, but I want to share with you things that just happened this past week, okay? Here's an example in AJRD. This is using steps 1. Let's say you are the type of trader that likes to trade those strong trends. Well, looking at this stock here, we see that we have a fairly strong trend to the upside. All you would have to do, once again, is with the PTS Primo charts, go up to the strategy tab here. Here has, on the green tab, all of my strategies, all of my techniques I've accumulated in 4 decades. Click on steps 1, and look at all the buy signals that were generated, okay? Going throughout July. This is just this past month. And then let me tell you what happened yesterday. Some news came out, and look what the stock did. It gapped open tremendously, all right? Using steps 1, you could have taken advantage of that. If we notice here, we see that there was no chance for the stock to pull back. This is the type of trade that's perfect for a continuation trader, for a steps 1 trader, because there wouldn't have been a chance for you to wait to get into this before the stock gapped up tremendously. So this is who it's designed for perfectly. Steps 1 is for the trader who wants to just jump in, does not want to wait for any type of sell-off because he doesn't want to miss the boat. Now, this happened yesterday. This was on Friday when the stock gapped up, supposedly off some news. I don't follow news or read news, so all I do is just follow all of our tools and indicators. Now, that was just not the only thing that happened yesterday. Weight Watchers came out yesterday with some really nice movement in the stock. Now, if we applied steps 1, this is going back to May or so, April and May, obviously this stock has had a very strong upward move. No pullback at all, okay? As you can see, steps 1 is perfect for this scenario. All you'd have to do is hit steps 1 tab up here and look at all the buy setups. Depending on how you wanted to enter, once again, it's up to you. We share with you those 3 different entry points. It would determine whether you had a good trade or not. Now, as you see here, you could have purchased on the close, but then gone through a 3 or 4 days of sell-off, or waited for it to trade above and just simply waited for it to take off. It's totally up to you. We're putting the power in your hands. But here's one thing I want to share with you. Remember, that's steps 1. That's for the trader who doesn't want to miss anything. What if you're the type of trader like me who likes to wait for those high probability pullback entries? All right, well, let's see what happened to this stock. This was coming into July. This was just this past week. And then let's see what happened. The stock actually sold off. Now, a lot of people would say, wow, that was a really nice run. It was fun while it lasted. Too bad, we missed it, but that's okay. I guess the fun's over. It's going to probably go all the way down 50% retracement to where the support is, a Fibonacci support, or maybe where the volume is going to pick up. That's where I'll buy it again. All right, steps isn't based on any of those things. Why overcomplicate your trading? Let's just see if this was a pullback and not a trend change. You would simply click on steps number 2, and as you can see here, a buy signal was generated, I believe, Wednesday. So this was the pullback you were waiting for. As you see, there were no step 2 buy setups all along the way until this past week, Wednesday. So had you purchased then, This happened on Friday, okay? Obviously, some news came out. Something came out that had that stock gap up. I have no idea what it is. No one called me up. Oprah Winfrey didn't call me up and tell me to tell my students to go long. We knew Wednesday because the market was telling us by the proprietary techniques in steps 2 to go long. So we had already purchased it 2 days before this really nice run up. So you have to decide what type of trader you are. Do you want a lot of trades and jumping in when the market is really moving, or are you the type of trader that just wants to sit back and wait, doesn't care? You have that patience to wait for that high probability entry point and apply steps 2. Now, we're not going to just stop there. We're offering you this great discount for only $7. We're going to give you a 30-day trial of using the PTS Primo charting platform along with steps for only $7. You're going to get all the signals. You're going to get all of the up and down arrows telling you exactly where these are happening in real time. So you'll know and see how powerful this actually is, okay? It's going to give you the confidence to really pull the trigger. You're going to be able to heighten your performance of your current strategy, build strategy based off this, but you can see how well this is going to work for you for 30 days for only $7. But we're not just stopping there, because included with this, you're also going to get the bonus scanner. So we know a lot of you aren't able to be in front of your computer all day long. Well, look at how simple we've made it on the new PTS Primo charting platform. All you have to do is, let's say you punch up steps 1. Well, once you click on the arrows, you could also click up the scanner, okay? So say you come home from work that night, you click on signal arrows or click on the scanner, whatever you want to look at. And if you click on the scanner, you're going to get a page like this, okay? You'll simply load the symbols, and we provide you with the symbols, the different ETF symbols. If you like to trade ETFs, we give you the S&P 500, the NASDAQ 100, whatever market you like to view or trade. And once you load the symbols, you will get all the symbols here on this type of spreadsheet. Now, once the symbols have been loaded for the markets you're looking at, you simply hit scan. It's this simple, a 2-step process, and you will get color bars on the far right. The red colors are showing you the sell signals for that particular stock. The green bars will show you the buy signals. All you have to do is simply click them on, and they will come up on your screen. Now, here's one way to view the new PTS charting platform. Our different ways of viewing it, different ways of knowing what the trend is with our buy-sell line, our tops, bottom 25% tools, and our steps here on the far left. And the signals are already and automatically generated for you. So this is a great, once again, great way to trade. As we look here, here was another example using steps 1 where the market started to take off, and it wasn't really a pullback. We already started to take off, and this was an Oracle, and the stock gapped up roughly about 6 points in 3 days after that came out in last June. Now, if you're a steps 2 trader, guess what? You would have had a buy signal a week prior to that. And so you could have applied that as well. So that's the beauty. You can get both step 1 and step 2 buy signals on the same stock, depending on what type of trader you are. So you're not going to miss out. Remember, this is a great offer. It's a 30-day trial of our new PTS Primo charting platform. I'm really excited about it, along with a great discount of only $7, okay? $7. We feel after 30 days of only a $7 fee, you'll be fully convinced that this is really what's right for you, okay? So sign up for this. This is a great offer. If you want to contact Pro Trader Strategies, here's the information. The best thing to do is, as you see here at the bottom, this is the link that will take you to that $7 offer. Unfortunately, it's not live, but that's okay. On the right-hand corner of your chat box, on the Go to Webinar column there, we have put on a live link for you. As you see right there, it's the ProTraderStrategies.com steps course. All you have to do is click that on. It will take you to the $7 sign-up page where you get the charting platform. We have a great tech support. It will set it up for you if you're having difficulty, if you're not familiar with setting up a platform. It's already pre-canned. Everything is there. There's nothing you have to design yourself. The charts look exactly the way I presented them, okay? So there's nothing that's going to be different in that. You said, well, this is totally unlike what Steve showed in the webinar. The charts will look exactly the way you see them right there. You just click on the tab, and it'll give you steps 1, steps 2, or the scanner, okay? Plus some other features as well. So I'm going to leave this information up here. Thanks for holding off on any questions. Let me just open up the question and answer box if you happen. Oh, yeah, this is someone's asking, can we apply this for day trading as well? Yes, you can. You probably asked that before I showed the examples. But yes, I showed 5-minute charts. I showed 15-minute charts. I personally use it for day trading. I use it for day trading the futures. And it's a great tool. So it does not matter what you like to day trade. We have people that currently use it for day trading commodities and currency pairs. So it makes no difference. Wherever there is a trend, regardless of the time frame and regardless of the direction, steps 1 and 2 will generate signals. Now remember, we're not guaranteeing you that everyone's a winner. Some are better than others, but this is something you can see for $7 you can experiment with, and paper trade obviously in the beginning, but you'll see the value of this and you'll say to yourself, boy, what, I've been missing this for so long. Why haven't I had this before? So I can honestly say for $7, this is the type of thing where you probably spent more than $7 yesterday trading or on commission costs. Think of your lunch today, a Saturday afternoon. If you're going to go out to lunch, I don't even think a lot of you can go to fast food for less than $7 or $8 today. So this is going to be full month of the platform, free tech support. It'll be so easy for you to initiate and start viewing on a nightly basis with the scanner. Works on intraday trading, futures trading, works on position trading, long-term trading, makes no difference. Plus some extra features that we also have as well included, like our buy-sell line features, as well as our up-down 25% features, which you'll learn more about in coming episodes here of these webinars. But this is a great, great offer. Take advantage of it. Any more questions I can take right now, but I know a lot of you are probably, I can see that many of you are clicking on. We have, many different features available. It's just so much jam-packed information on the PTS Primo charts. This is the great way to get initiated with it. People are asking, after if I decide to choose to trade it full time afterwards, how much will it cost? That would be something you want to ask Pro Trader Strategies, because we have different discounts. There's different ways to work it. You can have a small payment plan, and it depends on what format you have. We have different tiers. If you want to get all the strategies, if you just want to get 1 or 2. So that's probably a question for Pro Trader Strategies, because they handle all of that. People are asking, can I see this recording? Yes, we will have a link sent to you for this recording, but please remember, you have to take advantage of this special offer because it's only going to be a limited time only. So I wouldn't, TJ, I wouldn't sit on this and say, well, let me think about it for a week, because that $7 discount may soon vanish. So I take advantage of it if I could. And you have to ask yourself, for $7, I mean, you're not going to be locked in for anything that cheap for a long time. This is something that I have used and I continue to use, and it's a great, great benefit. Okay. Well, if that answers all your questions, I just want to say thank you so much for attending. Remember, $7 you can't lose with that great offer. If you have any questions, contact Pro Trader Strategies. You see their email and phone number right here in front of you. And please, if you're going to look at the video, wait for the video of this recorded presentation. Just don't sit on it, because you may lose out on that $7 offer, okay? Just click on the tab, $7, you can't lose with that, and I'm sure you'll be so happy after a month of seeing how steps 1 and step 2 can work in your trading, okay? Thank you so much for attending today. I wish you the best of luck trading, and I hope to see you all in our steps course. I'll see you later. Bye-bye.